Now this, a new article, it's in the Wall Street Journal. It raises the question of whether big tech companies like Amazon, Facebook and Google should be broken up on antitrust grounds. Joining us now is Gene Munster, managing partner at Loup Ventures. Gene, I don't know how you apply antitrust law to these big companies, because it's a very old law and it works on old-fashioned companies. But do you approve of the idea in the first place of breaking up the Amazons and the Googles and the Facebooks of this world?
Definitely not, Stuart. I think what you will see here is some more regulation in terms of how they do business. That's the potential risk. But the idea of breaking up these companies is bad for the consumer. Let me just quickly explain why. Is that, like you said, is these antitrust laws were baked into things like in the oil industry and AT&T when there wasn't a ton of innovation. And the standard of care from the regulators is that is the consumer worse off because of these monopolies, essentially? Google with 90% search share. And the answer is that I believe that the consumer is not worse off because they get free products from these companies. Now, advertisers are paying for these services. But if the standard of care is truly, is the consumer better off? Let me just give another quick example, is Amazon. Because they have a good market share in the e-commerce piece, that allows them economies of scale that basically get you cheaper shipping. And so I think that if the government went and broke these up and consumers paid more for shipping, there'd be anarchy.
Okay, we hear you. By the way, I'm just looking at my little monitor here. Microsoft is up $1.20 at 89.52. I just thought I'd chuck that in there because some of the other big techs are down.